In today's video, we're going to discuss why I'm dumping two Yieldmax funds entirely, JP Morgan and Exxon, in order to go into these more undervalued names that I see in the portfolio that have both large dividends and high capital gains potential. So we earn over $150,000 per year in dividends at this channel, and my performance and value shows that I'm up 29% for the year. So we're not just getting high dividends, we're also getting good performance. We're beating the S&P. And it's important when you're getting dividends to also get performance. You don't want to have your own brokerage account eroding on its own. You don't want to just have dividends, high dividends, but you're going down by the amount of the X states and your brokerage account is eroding as a result. You want to also get capital gains too, the best of both worlds, dividends and capital gains. If you need help doing this, you can email me for my e-guides at akintod48@gmail.com. So yesterday, the first thing that I noticed in my account was that because I was making a video on Coney and Tesla, I was showing you the income that I earn, which is about $15,000 per month. And I noticed that I was telling you that the Coney dividends won't stay like that forever. Even though Coney was up today huge, let's see, it was up 7% for us today. And the dividend is like 126%. I've been showing you in previous videos. I don't expect those dividends to last. So my dividends of 170,000 that you see should be more like around 160,000. And I was just noticing at the same time that Exxon and JP Morgan paid me barely anything to own them. So the dividend amounts were so paltry. They were so small, these paltry dividends, that I went ahead and sold JP Morgan and Exxon, and I freed up $4,000 in cash to do that. Okay, so my margin went from about 150 to 146. And as you know, for all you newcomers at the channel, my dividends of 150,000 will pay back this margin debt in less than 1 year. Also, this margin debt is low interest, so I live the fire lifestyle through my margin account because this is lower interest than credit cards. Me and many of my clients have negotiated our margin rates down. I've negotiated mine down 2 times. When you buy my e-guides, you get my phone number, so you can call me and I help walk you through the negotiation process. But this doesn't show up on credit checks to banks, and it helps you qualify for loans to banks. So they won't take trading gains. They only take dividends or jobs gains, okay? Pay stubs or dividends. So that's how I'm living the fire lifestyle. And then once my debt is gone, I don't know if you guys understand this, because with credit cards, when you pay your debt down, you just go to zero. That's it. But when you pay your debt down here in a brokerage, your 478, it grows by the equivalent amount. So my account will be at, let's just say we're at 500,000. My account will be at 650 in 1 year, and my debt will be at zero. And then I'll be left with all these dividend paying assets to myself, paying me monthly cash flow for life that pay my bills and qualify as income to banks, okay? All my bills are automated out of E-Trade. With my checking card, my E-Trade checking and debit card, I can go wherever I want in this world, and I spend out of this number, the available withdrawal, not this number, my account value. I keep the available withdrawal number high, and that's the secret of this channel. And that's why I talk about things like maintenance, which we're about to get into now, okay? So the names that I sold were 50% maintenance, JP Morgan and Exxon. Those raised $2,000 total for me, because if I had $4,000 invested and I sold all of it, that meant that at 50% maintenance that it took up $2,000 of my available withdrawal. So I raised $2,000 in withdrawal for withdrawal, and that was nice. Okay, I lowered my margin debt by $4K, and I raised my available withdrawal by $2K. All right, see the maintenance here, 50% for Yieldmax funds like Coney. If you need help understanding maintenance, that's in my Volume 3 Margin e-guide. Okay, so what I did today was I sold those Yieldmax funds, okay, and then I used the cash to buy some energy names, because as you can see here, I've been buying retail. Kohl's was up another 8% for us today. I've been making videos on Macy's and Kohl's. I've been saying that that Macy's is skyrocketing from its takeover news, and Kohl's helps you benefit even on typical days gains. I can get about $1,000 from my options, and $60 is what we're up in the Kohl's option today, and then we're up in the stock as well. And I also bought some retail. If you look at a chart of Kohl's, you'll see that it looks textbook. And I'm showing you Kohl's really fast because it has a large dividend. It was in the S&P, and the chart is, again, textbook. I was showing you guys this chart And the last video that nobody watched, okay, the video on Macy's, no one watched this, but I'm selling the put options here. I'm controlling calls. I bought calls on the 200-day moving average here, the black line, and I'm also selling puts at this 200-day moving average. Okay, so I paid for the position. I lowered my margin by selling the put options, and now my margin debt is even less, okay, from Kohl's. And it's really starting to break out now, I think, especially after the Fed interest rate announcement today of them keeping interest rates steady. They're not raising. So this is just a textbook chart. If you need help understanding charts, that's in my volume 2 e-guide. When you buy all of my e-guides, you get free access to my phone number and the Discord chat room for life. Okay, we have about 500 members, over 500 members in the Discord chat, living the FIRE lifestyle as well. So, we have an options channel in the Discord chat room. Okay, you can follow my portfolio in Discord. We have a Yieldmax channel. We have a Cornerstone channel. But we also have an options channel and a lesser known dividend stock channel. So that's where Kohl's is in Discord. Okay. Also on Discord, we give you the rights offering announcement for Cornerstone, which is the biggest. That's the reason why we started Discord in the first place. Cornerstone, my largest fund here, 400,000. Okay, that's where I anchor most of my income to. All right, if you need help playing Cornerstone, that's in my volume 4 e-guide. All right, you have to time that fund around its rights offerings. Beware of that. So we're doing the total approach here. I don't care about making videos about stocks or ideas like other YouTube channels. I'm giving you the total approach. Every day I'm actually living this out of my portfolio, living the FIRE lifestyle. So Kohl's, I sold the put option on Kohl's. If you want to learn how I did that, go see my past video on Kohl's and Macy's. Okay, and then today and also I bought some retail. It was up 9%. Okay, it's another textbook chart, just like I showed you with Kohl's. But what I did today was I sold Exxon and JP Morgan and bought some more Devon because I was down in my cost position on Devon. Okay, I added to this, and I added to Pioneer as well. They're both in the S&P, PXD and Devon. They're both in the S&P, and they have a large dividend. And their charts are also textbook. Their charts are looking like they're at a perfect buy. Okay, so I'm trying to get more overweight in energy, but not too much, because energy and retail, retail is a bigger part of the indexes, but energy is a much smaller part of the indexes. So I'm trying to stay away from having too much energy exposure. But as you can see here, we're at a crucial point on the chart. We're on the 200-day moving average on that black line, and on a max time frame, you can see that we're also looking cheaper right on that 200-day moving average. So this is where I come in and do some buying for the long term. That's Devon. Pioneer looks the same. Now, what I did was I bought these two, and then I sold an option on Energy Transfer, because Energy Transfer has a nice dividend, about a 10% dividend. And look, it's looking textbook. It's getting above all of its moving averages on a max time frame. But on a 1-year time frame, you see it's right on the 200-day moving average, and we got a good bounce today as well. So I went in and sold that put on Energy Transfer today to lower my margin by about another $700. I lowered my margin by $700 selling the Kohl's put, okay, KSS, and I did that because the share price was small. I got $675 for KSS, and then I got $700 for ET, okay, $20 ET strike price, and I got $700, $716. Which means that my cost basis is below 13. So I got $700 for this, knocked my margin down by $700, and lowered the cost basis to where I'm controlling Energy Transfer now at a cheaper price than it is in the actual marketplace. And I don't expect ET to have a crazy run up because it's pipelines, it's conservative. So I don't mind selling the put option and just collecting the premium instead of collecting the capital gains. And the capital gains will come from Devon and Pioneer, because these are the drillers in oil and gas. The drillers move a lot more than the pipeline side of it. So drillers, the frackers, they, again, the energy and exploration names, they move a lot more. They have a lot more beta than the pipeline midstream names. So I bought those for the nice dividends and capital appreciation potential, and then I sold the put on ET to pay for those buys, and that's what kept my margin debt down to around 146,000 again. So again, that'll be paid off in less than a year. And I can always sell more options to pay my margin down if I want, but I don't really care to keep the debt on because the interest is so low. So that's what I did, guys. I dumped these Yieldmax funds for more energy plays because they're cheaper and have large dividends, which is what the theme of this channel is. But they also have high capital gains potential, more than Yieldmax funds. And then I sold the put on ET to pay for that. And I did the same thing with Coles and selling the option on Coles and buying RETL, the retail ETF. So I hope these were some interesting ideas for you. Again, if you need help living the FIRE lifestyle, which is financially independent, retire early out of your brokerage account, email me for my e-guides at aikentod48@gmail.com. And if you like the video, click like or subscribe, and I'll talk to you soon. Thanks.